Ladies and gentlemen, good day and welcome to Exchange India Limited's Q3FY22 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Exchange India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the third quarter of financial year 2022. Before we begin, let me mention a short cautionary statement. Some of the statements in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is solely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and give it over to them for opening remarks. Firstly, we have with us Mr. Ankur Patni, Executive Director, Mr. N.M. Ranadive, Group Chief Financial Officer, Mr. Vasant Naik, Executive Vice President of Finance, and Mr. Milind Puranik, Company Secretary. Now, without any further delay, I request Mr. Vasant Naik to give his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good afternoon, everybody. It is a pleasure to welcome you to the earnings conference call for the third quarter of financial year 2022. Firstly, let me wish all of you a Happy New Year and hope everyone is keeping safe and well. Let me take you first to the financial performance for Q3 FY22 of our company on a consolidated basis. The operating income for the quarter was INR 3882 million, an increase of around 11% on a year-on-year basis. Operating EBITDA was INR 427 million, decrease of 4% on a year-on-year, and the EBITDA margin stood at 11%. Net profit after tax reported was INR 280 million, a decrease of 2.4% year-on-year, while the PAT margin percentage was 7.21%, decrease of 101 basis point on a year-on-year basis. For the 9 months ended, the operating income stood at INR 10,805 million, an increase of 7.6% on a year-on-year basis. Similarly, the operating EBITDA stood at INR 1182 million, increase of 1.3%, and the EBITDA margin was at 10.94%, a slight decrease of 68 basis points, and PAT stood at INR 785 million, an increase of 7.7%. PAT margin percentage remained at a similar level at 7.27% as compared to the previous year. Let me take you through the quarterly segmental performance on a consolidated basis. In the engineering division, the revenue for the quarter was INR 2168 million compared to INR 2161 million during the same period last year. The EBIT for this segment was INR 113 million, which decreased by around 29% on a year-on-year basis. And for the 9 months ended, revenues from this segment were INR 6143 million, a slight decrease of 5%, and EBIT stood at INR 336 million, a decrease of about 23% compared to the same period last year. There has been an improvement in the order book on the back of the EPC order from the Numaligarh Refinery Limited, coupled with steady flow of medium-sized orders during the quarter. Execution of the Sri Lanka order remained affected during the quarter due to COVID-related restrictions, and we have received time extension from the customer for the contract completion. Revenue accrual from the UP Jal Nigam project has commenced during this quarter. While it is not substantial, we expect accelerated impact in the ensuing quarters considering the planned execution timelines. Although the company has taken measures for mitigating the rising input cost, the overhang of the increased commodity prices affected the margins in this segment. Finally, coming to the order book as of 31st December 21, it is around 1262 crores, excluding Sri Lanka and UP Jal Nigam. And if we add these two to the order book, our total order book size will be INR 2756 crores. Further, we also have a big pipeline of approximately INR 5640 crores, With this, we have a strong revenue visibility for the next 2-3 years from the engineering segment. Coming to the chemical division, the revenue for the quarter was INR 1467 million, an increase of approximately 28% on a year-on-year basis. The EBIT was INR 308 million, which has also increased by 15% on a year-on-year. For the 9 months ended, the revenue from the chemical segment stood at INR 4065 million, an increase of 31%, and EBIT stood at INR 863 million, an increase of 28% compared to last year. The sales and dispatches in the domestic segment continue to record steady improvements. However, exports continue to be affected due to the logistic issues and resurgence of the COVID infections in overseas markets. The company's efforts to mitigate the impact of increased raw material costs are meeting with gradual success. Consequently, the overall margins continue to be at suboptimal levels during the quarter. Lastly, in the consumer division segment, the revenue for the quarter was INR 352 million, an increase of about 24% on a year-on-year basis. The loss for the quarter in this segment was reduced to INR 2 million versus a loss of INR 7 million for the same period in the previous financial year. For the 9 months, the segment clocked revenue of INR 941 million, increase of 33% on a year-on-year basis, while the losses stood at 20 million compared to 23 million in the same period last year. The new product launches and the increased market coverage has resulted in improvement in the financial performance of this segment. With this, we can open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pratik Kothari from Unique PMS. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. So my first question on the chemical side, after quite some time, we have shown some very decent growth on that side. So this 150 crores or the 20-25% growth year on year, how much would it be volume led?
The volume growth is per se not very easy to, because it's a very, very wide basket of products, and the composition and mix of the products that we sell keeps changing. Hence, that's not a tracker which we give out.
Okay. But would it be substantial on this 20-25%? Or is this price led only? Because you have been mentioning for past 2 quarters that we have been passing the heightened raw material prices.
Yeah, so there is volume growth and also there is a price impact. Both of those would figure in this increased revenue.
Fair enough. And this 20%, 21% EBIT margin, I mean, we did mention in the presentation that it is suboptimal. So where would that range be, where you would be happy with the margins that you make?
I think, the way that we were looking at it, benchmark our current year's performance first against the previous year's numbers. And that's why, since we're coming short of the overall percentage margins compared to the last year, we should have been much better than this if the situation was closer to normal.
Okay, fair enough, fine. And so my last question on the engineering side, I believe on the past couple of calls we have been mentioning that we are seeing some heightened demand from private sector domestically for the capex that they are doing. So just some flavor of what is happening on that side. Just your sense on it, please.
We are looking at a lot of interest across the board, but the overall order finalizations are getting affected due to this volatile situation caused by the pandemic. Each time that we see a surge, we also see the managements of various private sector companies trying to defer the decision rather than to hurry on the capex. But that said, the underlying demand growth is very much visible. We should see conversion of those into firm inquiries in the coming quarters.
Okay, fair enough. And I believe as we keep completing our older orders and we keep getting new, the margins on the engineering side should come back to the numbers which we saw last year, maybe a quarter or two down the line.
That's right. That's our expectation.
Fair enough. Sure. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Vivek Gupta, an individual investor. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I have a couple of questions. One is like from the past couple of quarters, we have been giving a healthy bid pipeline, but the actual conversion is very low. So apart from the recent order which we have won for Numaligarh refinery, so I think there was nothing which was given for the last quarter. So I want to understand why the conversion rate is so low and who are our competitors and if they are winning the orders or like there's a delay at the like deal win part. The other is like our consumer segment is a loss-making segment. So we have been trying hard to really revive on that part. So management has been very optimistic. I've been seeing in other calls, but the ground reality is different and the numbers are not coming across. So what we are doing to really turn around that part? Thank you.
I think the numbers which we have presented and the trends that we are seeing would suggest that our order conversions in the last 2 quarters has been significantly better than the previous quarters. Our Vasant will give you the numbers of the order wins during the quarter. Also, the performance of the consumer division has substantially improved during the last quarter, and I expect this momentum to further improve in the last quarter of the financial year. So we remain very confident about the consumer segment shaping up and starting to contribute towards the bottom line. Vasant, can you share the order wins in the last quarter?
Yeah, the order inflow for the December quarter was 424 crores. And if you see for the 9-month period, our order inflow is around 1,092 crores. And vis-a-vis the same period of last year, it was around 501 crores. So definitely the order inflow has significantly improved in the current year.
So how much part of this, like the total order book which we have, what part we are expecting it to complete in this quarter? What projections we have there?
The order book which we have currently, we should normally expect an execution period of roughly 2 to 3 years. It's a mix of large and small orders. The small orders typically get executed in a time frame of 3 to 6 months. The mid-sized ones go to roughly around 1.5 years or so, and the larger ones go up to 3 years. So that's the overall mix. It would be safe to say it will take around 2 to 2.5 years for this.
Okay. So the other question is like, where are we on the capex side for the chemical division, which we have projected for somewhere around 200 crores? So how is the capex going there?
The new resin project which we had announced, that is environmental clearance. We haven't yet received the environmental clearance, but we are expecting it any day now. And the capex on that will start in earnest once such a clearance is received.
Okay, thank you.
Yeah.
Thank you. The next question is from the line of Ishrat Khatri from Omkara Capital. Please go ahead.
Yeah, hi, good afternoon, sir. Am I audible?
Yes, you're audible, Ishrat. Good afternoon.
Yeah, hi. So I just wanted, I wanted to know regarding the execution engineering. Obviously, first half was severely impacted, reason why we couldn't achieve about 380 odd crores of execution for the engineering business. And this quarter also, the performance was pretty average. So just wanted to know, we've done only about 1,000 odd crores in engineering. Overall, during the 9M and engineering has been about 600 crores. So how do we see the execution going ahead? Because I do agree that the order inflows have been pretty healthy now, but execution on the other hand has slowed down. And Sri Lanka also we won't be completing this year is what I believe. So what has been the main reason? Is it only COVID or has there been any other issue with the execution?
No, the execution has largely been impacted by COVID because a lot of this work, as would be obvious, happens on the ground. And especially if the work involves on-site execution, including civil work, COVID takes a big impact on this. The Sri Lankan order has been substantially impacted because of COVID-related restrictions and lockdowns. In the last leg of this order execution, there is a substantial amount of that is getting impacted. We have got an extension from the Sri Lankan Water Board. I would not expect the execution to get completed within this financial year now. Our current estimates are the execution will flow over to at least the first quarter of the next financial year. Overall, the impact of the COVID and related issues on our overall engineering revenues, we expect that to be roughly in the tune of around 200 crores or so. The revenues to that extent would get deferred to the next year.
Okay, sir, got it. Also, another follow-up would be on the margins for the engineering business. Obviously, last year we made really good margins on this division. But this year I see that we've been averaging at about 6-7 odd % EBIT margins. So do we expect, based on the current orders that we have of about 2,500 odd crores, we can expect similar margins going ahead, about 6-7%?
If I look at the comparison at this year, I think our margins vary to those numbers. By the end of the year also, I expect the margins on a full year basis would be comparable to the last year.
Okay, sir. Got it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Digant Haria from Green Edge Wealth. Please go ahead.
Yeah, hi sir. So because I'm looking at the company only recently, my questions are a little more basic in nature. So I wanted to know that, in this engineering division, for water treatment, wastewater treatment and zero liquid discharge, do we generally get orders when new plants are getting constructed or even the existing plants give us orders? So that's my first question.
The order flow typically would happen during the initial period of the capex cycle, but it's not only at that time. Especially when you look at the wastewater and recycle side of order flow, that can happen at various points in the company's lifetime, and typically after the first initial capex has happened. The newer projects executions which are now happening, they would almost always have waste treatment included. A lot initiating these expenditures or enhancing their capacities much later. So that's a broad roundup of when the capex happens.
Okay. Thank you, sir. So, and second question would be, so that would it mostly be that, the multinational companies and the large listed companies who are, conscious about the ESG scores or, the small enterprises that we call, who may not be doing it for regulatory purposes. So is that part an up for the top MNCs and top companies also you started getting orders? Has this trend changed in the last few years?
So the overall awareness level and the intent of the industries to follow practices which are more environmental has increased quite a bit in the last few years. Expenses are certainly influenced by the statutes and the laws framed by various governments. And there is enough number of industry players who now sincerely believe in their obligations towards the environment. The quality of the proposals that we are making, even to the medium and small size industries, has gone up in recent times.
Okay, sir. So which means that, just that the fresh capex would not be our only demand driver, the lot of existing units which are there in India which are not compliant. So would you have like a rough cut that, of 100 crores of order that we get, how much comes from fresh capex and how much from, the existing ones who want to improve their, water treatment or liquid discharge part?
It keeps from time to time. There is no definitive, single number when we look at this kind of a metric. The brownfield expansions which take place from time to time, sometimes they can lead to quite large investments, and otherwise the greenfield investments generally tend to be the bigger piece of our demand cycle.
Okay. Thank you, sir. That's very, very clear. And lastly, in terms of the expertise that we have in this wastewater treatment and zero liquid discharge, what competition do we face? And what is the pricing differential which we will have versus, say, the next best or, the next 2 or 3 players in India?
Can I request you to have a word with Valorum Advisors? They can probably patch you in basic details. We'll be happy to answer any leftover questions and clarifications.
Perfect. Thank you, sir. Thank you. I'll do that. Thank you.
Thank you.
Thank you. The next question is from the line of Chetan Vora from Abacus. Please go ahead.
Yeah, good afternoon, sir. I sort of wanted to understand that now we are done with 3 quarters, and the preceding quarter also we were maintaining our revenue growth guidance of 20%, and FY22 margins to be the similar to the likes of FY21 margin, wherein the quarter 4 was quite a robust quarter. So where do we stand in that part of the guidance, sir?
I think quarter 4 would certainly be much better than the earlier ones. However, it does seem that some of our large engineering revenues would slip into the first quarter of the next financial year because of which have come in. Sri Lanka and UP, both of these contracts are affected by this. My expectation is that the impact because of these issues would be somewhere in the region of around 200 crores of revenue. So that revenue would slip to the first quarter of the next financial year.
Sorry, 200 crores slippage you are saying?
Roughly, yes.
For the engineering division?
Yes, largely. So most of these, as I mentioned, the Sri Lanka and UP contracts, they would be part of the engineering segment.
Mm-hmm. And what about on the margin front, sir? Because last quarter, March quarter was quite a strong quarter in terms of margin. Also, engineering division reported a 16% margin, and if you are maintaining that, we will be closing with FY21 margin, which was nearly about 10%. Okay, for the FY21. And
I think our overall year-end margins should be in the similar range as last year.
Okay, so fair enough. And even on the chemicals front, you are seeing the same thing?
Chemicals front, the margin impact has been higher because of the increase in the prices and the expectation which we that the prices would cool off. The fall, there is a slight relaxation in the upward trend, but they have not really cooled off enough. By the end of the year, compared to the last year, we will be the margin down.
I'm not. Your voice is just getting breaking. Could you repeat, sir? Okay, what's the outlook on the margin front for the chemicals?
Our year-end margins compared to the last year would be a little bit less than what we had last year. So, the price of the various input materials, they have not really cooled off enough for us to recover the lost margins.
Mm-hmm. Okay. But for the FY23, so it will be seeing the deferment of FY22 revenue, the slippages, and the FY23. How you are seeing the FY23 as a year from the business perspective? Because the UP order will be getting executed under the full swing, and the raw material prices volatility is also behind us. So how do we see FY23 to pan out?
I think if you look at the engineering piece of the business, we are going into the next year with a very robust order book.
Right.
And a good portion of the UP order would be getting executed in the next financial year. My expectation is that along with the spillover of the Sri Lanka order and this portion of UP contract, that number will be very significant. So next financial engineering segment should post very healthy numbers. On the bottom line, also the effect of this higher scale should be visible. Chemical segment, as I mentioned, that we are expecting a slight dip in the year-end margins percentage as a whole. However, the absolute numbers, the margin would still be better than last year. And the last turned out to be a reasonably good quarter for the chemical segment in terms of both margins and revenue, which would come back to more as against last year. So if that trend continues, chemical segment also should see a very good, relatively good next year.
Okay. And just not on the cost of repeating it, but chemical margin last year FY21 as a whole were at 24%, and for 9 months we have done nearly about 21% margin. So where should we be there, because the range is quite wide, and the quarterly March last quarter was nearly about 30%. So where do we stand in terms of bandwidth plus minus 2%?
Mr. Vora, request you to please stay connected. We have lost the connection for Mr. Patni. Participants are requested to please stay connected while we reconnect the management. Members of the management?
Hello?
Hello? Yes, sir, you may please proceed.
Yes, sir.
Yeah.
So what I was asking at the cost of that chemical margin has been quite volatile, and for the 9 months the margins were in the range of 21%. For the full year last year it was like 24%, and March quarter was particularly strong with 29% margin. So where do we stand in terms of the margin thing for the chemicals? The revenue growth has been good for the chemicals, but what about the profitability? You said the margins are at suboptimal levels. So how should we see the margins in the chemical division to unfold going ahead?
I think for the full year, compared to what we saw in last year, against the 24% odd, we should see approximately 2 to 3% dip percentage margins.
Okay.
We will recover some of the lost grounds, but it may not be enough. And I don't want to be aggressive in my projection. The volatile times have proven that some of these assumptions may go wrong, but it would seem that we will be able to recover some of the lost ground, but not enough to match the last year's year-end margin percentage.
Right. And what about FY23 for the year as a whole, sir?
My expectation is, as the year progresses, the commodity prices and our ability to pass on more of these increased costs would be substantially improved, and we would come much closer to the numbers which we reported the previous year, if not surpass it.
Okay, sir. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Nikit Shah from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity. Sir, I just had one question, and it might be a naive one. So the government has recently approved a very large opportunity for the semiconductor manufacturing in India. And as we know that for semiconductor manufacturing, you require extreme pure water. So I'm just trying to understand, would we play a role in that opportunity, and would we have capabilities to play a role in that opportunity? Thank you.
Absolutely. We would definitely play a role there, and we are already in discussions with a few large expected opportunities. I'm sure that it will lead to at least a few decent orders for the company.
Would it be possible for you to give us some sense on the size of the opportunity, or should we always compare this with something like a chemical business that you run?
Each individual fabrication plant which would come up would require decent-sized water treatment capability, as you rightly pointed out. This requires to be ultra-pure water, and therefore, in value terms, these are going to be good contracts. It's not immediately possible to give you a forecast. We will try and give it to you in the coming Concalls, but I do expect it to be substantial.
Sure, sir. This is very helpful, and I'll come back and queue for more questions. Thank you.
Thank you.
Thank you. The next question is from the line of Karan from Maximal Capital. Please go ahead.
Yeah, good afternoon, and thanks for the opportunity, sir. I just wanted to understand on the engineering segment a little more, just following up on the 200 crores impact that you mentioned. So, taking that into account, so would it be fair to say that on a full year Y-on-Y basis, we might not see growth in the engineering segment for FY22?
Vasant, can you give a broad indication about the year-end numbers as compared to the last year's numbers in terms of percentage impact?
Yeah, if you see the 9-monthly numbers, turnover is around 600 crores as against 618 crores for the 9 months of previous year, a dip of 3%. But what Mr. Patni was mentioning, the growth which we had projected of 20% by the year end, that may not come through, but we are reasonably confident that we'll be able to at least meet the full year numbers of last year, what we had achieved of 902 crores. And if things go right, we may be able to surpass it by some extent.
Sure, that's helpful. And one question regarding the Sri Lanka order. So the current, the turmoil that's happening in Sri Lanka, do we expect any trouble in collecting our outstanding once we execute the remaining order?
No, we do not expect any collection-related issues at Sri Lanka.
Got it. And a question regarding the UP. So, could you help me out between the split of O&M and EPC in the 1,200 crore UP order?
This is largely a EPC contract.
Okay, it's largely EPC because I understand there's a 10-year O&M sort of attached to it as well. So I just want to understand what portion of the order is that.
The size of the contract which we have indicated in our Concalls, that represents largely EPC numbers.
Okay. Understood. And a couple of questions on the chemical segment. So could you help me out with the capacity utilization in Q3?
It's roughly in the range of 75%.
75%. Okay, got it. And so coming on the question on the chemicals capex, so we expect that to come online by say end of next year. So what sort of volume growth are we anticipating in chemicals this year? I mean, do we foresee that we might be able to touch 85-90% capacity utilization in the next year?
Yes, we are looking at a substantially increased utilization level. The new capacity would come on stream only in the first quarter of 23-24. And by that time, I'm sure we will be very close to full capacity utilization on our resin facility. It is, whereas the other chemical facility, given the number of products that we manufacture, depends upon the product line. But there again, we are expecting a substantial jump in capacity utilization.
Got it. And will our resin capacity move up to 6,000 cubic meters per month post this capex?
So once we have executed the first phase of this expansion, our resin capacities will double.
Sure. And I think we're fairly optimistic on our ability to win market share globally in resin. So any particular thing that you could point out to that makes you so sort of confident of achieving greater market share globally?
We are getting extremely good response, and we have been doing so for some time now. Progressively, the acceptance of the products in the most advanced markets is only picking up. There is increased demand flowing in from some of the other economies. As I have mentioned in earlier calls, a very large percentage of our exports are to North America and Europe. And Southeast Asia, Middle East, Africa, all of these regions are showing a very good trend in demand pickup and product acceptance. So more than confident that we will be able to garner enough market share to fill up the expanded capacity.
Understood, sir. That's all from my side. Good luck going ahead. Thank you.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Namaskar, sir, and thank you for the opportunity.
Namaskar.
So just to summarize for what I've heard, and if I missed something, please correct me. That in the chemical segment, we are expecting our margins to improve with the utilization levels also improving going ahead. And for the engineering segment also, we are expecting the execution cycle to speed up for the fourth quarter, as has been the case earlier also. So, is this assumption correct, sir?
Yes, compared to the previous quarter, we will see improvements on both of these fronts, engineering and chemicals, and that is going to lead to margin improvement, even if it is not for other reason, just because of increased scale of operation, we should see some improvement. In the chemical segment, we are also expecting a small benefit to arise because of slight cooling down of prices, but bigger impact should come through in the first and second quarter of the next financial year.
So could you explain what that factors are? I mean, what constitute the major raw material in the chemical segment, and how have been the changes in the prices that will impact the margins going forward?
The chemical commodity markets as well as specialty chemicals have seen an increase in prices across the board for a variety of reasons, and one of them certainly is the supply constraints being faced in one of the largest manufacturing centers in China, and substantial bottlenecks being caused by logistic-related problems. Again, this is a global phenomenon, not specific to us. So it's not just one specific line of raw materials that we are talking about. It's a very broad-based price increase which has happened in recent times, and the scale of this increase has been almost unprecedented. So we expect, the overall levels of these prices to come down, if not rapidly, then at least gradually, and that should lead to margin expansion.
So for the chemical basket, which are the key constituents that contribute to the major revenue out of say last year's 440 crores? Which are the key chemicals, if you can classify them, and its end user industries where they are used, sir?
We have a very wide basket of products, broadly subdivided in two categories. One is resins and the other is other chemicals. Resins, the primary raw material would have a petroleum base, whereas the other constituents of resin as well as for the other chemicals, they are from a wide variety of base raw materials or base chemicals. Some of them would have petroleum-based origin, and some others may be, a different chemistry. So, as such, I'm not really being able to pinpoint a raw material line for you. It's quite broad.
Right, sir. And lastly, sir, on the employee cost also, sir, this will get evened out when the scale improves in the engineering segment going forward?
That's right. As we increase the scale of execution in the engineering segment, the fixed costs do tend to spread over a larger base.
Correct, sir. And sir, on the consumer product part, sir, on this category, how is the sentiment and the business proposition shaping up, sir? And how do you see the things shaping up in for this segment with now the COVID wave also subsiding? Also, it's not, the numbers are not saying in that direction, but how is this segment going to perform for the year end and also for the next year, keeping the COVID factor at the side?
The consumer segment is one of the most affected by COVID-related restrictions, because a lot of this sales marketing happens face-to-face. It requires substantially higher degree of consumer interaction. We are very sure that the level of performance would have been much higher than what we are able to demonstrate if the COVID factor was not there. That said, the segment continues to perform very well, and the last quarter should be much better than earlier. My expectation is that the pace of growth which we have seen in recent times would continue, if not accelerate. The product acceptance, the new product launches that we have done, we have found very good acceptance in the market.
Sir, so on
Mr.
a
Kothari,
basis, yeah.
Mr. Kapoor, sorry to interrupt, but for any follow-up questions, may we request you to rejoin the queue, please. The next question is from the line of Sunil Kothari from Unique Investment. Please go ahead.
Thank you for opportunity. Congratulations, sir, for very realistic and proper numbers in this challenging time. Sir, I would like to know from you, basically during last 3 years, we've seen stagnancy because of COVID and so many other factors. But it seems that external opportunity and looking at your statement, your confidence, there should be at least surge in order. Yeah.
So sorry to interrupt, but your voice is breaking up. So maybe we request you to move to a better reception area, please.
Okay. So, are you getting my voice?
No,
Hello?
sir.
Hello?
Yes, sir. Please proceed.
Yeah. Sir, my question is looking at your confidence on chemical and engineering, both the segments. I would like to understand how prepared we are for maybe substantial more acquisition and revenue generation capabilities internally in terms of team, our employees, manufacturing facility. We've done during last 1.5 years in terms of R&D. If you can broadly take a view, give you some thoughts and your clarity on for next, maybe looking at opportunity, if we can do a sizable revenue generation, are we prepared for that and what would we have done?
I am sorry, Mr. Kothari, a large part of what you asked was not intelligible. I mean, I couldn't understand what you were saying. If you can come back with a gist of your question, the voice is very unclear.
Okay. All right, sir. Thank you.
Thank you. The next question is from the line of Indrajit, an individual investor. Please go ahead.
Good afternoon, Mr. Patni. I joined a little late, so I am sorry if I am repeating my query. Now, in the last conference call, it was mentioned that we were aggressively pursuing a large international order. Are things on track with regard to that order, and can we expect to win it soon? Thank you very much.
We are pursuing a few very large opportunities internationally, and we were expecting things to move in the right direction in all of them, and hopefully conclude at least one sooner than later. But these discussions do tend to stretch out, especially in the last leg, because they need to go through various approval formalities within their state level, country level setups. And the COVID issue has only contributed to elongating these finalization timelines. We still do not have an order to confirm with you, with the investors, and we remain hopeful that it would happen sometime soon. However, my confidence of being able to close one within this last quarter has come down a bit. Hopefully, we will be able to announce one in the first quarter of the next financial year.
Okay. Thank you very much, sir. Best of luck.
Thanks.
Thank you. The next question is from the line of Amit Jain, an individual investor. Please go ahead.
Yeah, thank you. When do you see our company stock being traded on the National Stock Exchange?
Yes, the application is already filed to National Stock Exchange. Company has decided to list the shares with NSE, and in very short time, we believe our shares will be traded on NSE. Let us wait for some time.
Okay, this was the case last Concall also. If you could be a little specific, some dates.
Oh, there were some queries, and because of the COVID and other matters, the process was delayed. Now we have already whatever clarifications NSE had sought, we have already clarified, and now we hope that it will be processed. Our application will be processed shortly. But it is not in our hands, and NSE might query further things, so that's why we are unable to commit any timeline for it.
Okay, got it. Thank you.
Thank you. The next question is from the line of Hemal, an individual investor. Please go ahead.
Thank you for the opportunity, sir. Just two questions. What would be our net cash position as of December 31st? Hello?
Yeah, can you repeat the question?
I said, what would be our net cash position at the end of as of December 31st?
There's no change as of the September level. Hardly at the same level as September.
So would that be like 400 net cash or 400 CR?
Yeah, that should be right. But that includes, as we had mentioned earlier also, a lot of project-specific cash also, which are earmarked for the project execution.
I see. So what would be the less of that? What would be the amount which are non-project specific?
That generally we don't go into such specifics, so okay. I will not be able to answer specifically on such questions.
Okay, and just one final one. Generally, we keep trade receivables. Are there any trade receivables which is beyond 3 months, 90 days? Just wanted to know that much only.
Yes, our business cycle is structured in such a manner that there will definitely be trade receivables beyond 90 days.
So when do we account for like doubtful trade receivables? Usually after a year or beyond a year?
It depends on a case-to-case basis, depending on the category of the receivable, from which customer it is, and also based on the Ind AS provisions for the provisioning which is there. So it's a combination of all the factors which we take into account while allowing at any provisioning, if any is required, on a quarterly and year-end basis.
So do we have any old receivables beyond 1 year in this?
Yeah, there will be certain receivables which are beyond 1 year, which may have not come for certain reasons. But as I mentioned, if any provisioning is required, that we do on a case-to-case basis, depending on the category in which the receivable falls and what are the underlying circumstances why the money has not come.
But wouldn't be a very large percentage, right? Would be like 5%, 10%, less than that, or like?
It will not be a significant number.
Okay. Thank you again. Appreciate your answer. Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. N.M. Randive from Ion Exchange India Limited for closing comments. Over to you, sir.
Good evening. Thank you all for participating in this earnings call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, we will be happy to be of assistance. We are very thankful to all our investors who stood by us and also had confidence in the company's growth plan and focus. And with this, I wish everyone great evening. Thank you.
Thank you. Ladies and gentlemen, on behalf of Ion Exchange India Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.